Welcome to the Real Estate Bee with your guide and as a trusted real estate expert, Daniela Gnecchi.
Hello and welcome. This is the last video in my series of videos of how to rent out your home in Spain. We explored the different types of rentals, including new forms of rental. I explained which ones are the most profitable and the safest. We talked about the problem of the legal occupation of properties and how you can protect your home and avoid this risk. And today we are diving into the taxes that foreign property owners face when renting out their properties in Spain. It's a big topic. I will break it all down for you step by step. Stay until the end because I've got some practical tips for non-EU residents looking to optimize their tax situation. Before starting, I kindly ask you to subscribe to my channel. I am Daniela Gnecchi and this is everything you need to know to buy a property in Spain as a foreigner. As an expert, I sell new developments directly on the Costa del Sol, Costa Blanca, and Costa Calida, and I can assist you as a personal shopper for second-hand properties. I'll support you through the entire purchase process. Subscribe to stay informed and avoid costly mistakes. And now, let's get started. Before we jump in, there is a quick note. I am a real estate expert, not a tax professional. Tax laws can get pretty complex and they change from time to time. So while I'll give you a solid overview today, I strongly recommend consulting a tax expert for personalized advice. If you need one, I'll be happy to connect you with a trusted professional here in Spain. Just drop me a comment or send me a message. Okay, now let's talk about taxes. When you own a property in Spain and rent it out as a non-resident, there is one main tax you need to know about, the non-resident income tax. We'll call it NRIT for short. It applies to any income you earn from renting out your property, whether it's a long-term rental or a short-term holiday let. But how this tax works depends on where you're from specifically, whether you are an EU resident or a non-EU resident. And trust me, that makes a big difference. So let's break it down. If you're from the European Union or the European Economic Area, which includes countries like Norway, Iceland, and Liechtenstein, Spain treats you a bit more favorably when it comes to rental income tax. Here is how it works. Tax rate. You are taxed at 19% of your net rental income. That's the income you earn after subtracting allowable expenses. This is a big win for EU residents because you can deduct costs related to earning that rental income. Things like property maintenance and repairs, not improvements, but keeping it in good shape. Mortgage interest, if you've got a loan on the property, utility bills, if you're covering them as a landlord, insurance premiums, property management fees, or agent commissions. Even a depreciation allowance, Spain lets you deduct 3% of the property's construction value annually, prorated for the rental period. You'll need to file a quarterly tax return using a form that in Spain is called Modelo 210 within 20 days after each quarter. So April, July, October, and January for the previous quarter's income. Don't worry about that because the company that takes care of your accountancy and your tax declaration will be able to do this for you. You don't have to do anything. So for EU residents, it's pretty straightforward. You get to lower your taxable income with deductions, and the rates is a reasonable 19%. But what about non-EU residents? Well, that's a different story. If you are from outside the EU, like the UK, the US, Canada, Australia, things get a little less flexible. Here is the deal. About the tax rate, you are taxed at 24% on your gross rental income. That's right, it's gross and it's not net. Here's the tough part. Non-EU residents cannot deduct any expenses. No maintenance costs, no mortgage interest, no agent fees, no maintenance fees, utilities, nothing. You pay tax on every euro you earn from renting. About the filing, you use exactly the same model, the Modello 210, to be filed by the 20th or the following month of the quarter in which you rented out your property. Now, you might be thinking that that's a big difference, and you're right. Since Brexit, for example, the UK buyers have felt this shift especially hard because they went from the 19% net rate to the 24% gross rate overnight. And it's a key reason why understanding your residency status is so important. However, stay until the end of this video because there are some things that you can do to work around this situation if you are a non-EU resident. Let's put it side by side with a real-world example. Imagine that you own an apartment in Alicante that brings in 10,000 euros a year in rental income. Your expenses, maintenance, insurance, and fees in total are 2,500 euros. EU resident net income is 10,000 minus 2,500 gives 7,500 taxed at 19%. Which is 1,425 euros. Non-EU residents, gross income is 10,000, no deductions, tax at 24%, the tax amount is 2,400. That's nearly 1,000 euros more in taxes for non-EU residents. So if you multiply that for a few years, that really adds up. The non-resident income tax isn't the only tax to keep in mind. There is another tax that applies whether you are EU or non-EU, and it's called imputed income tax. If your property sits empty for part of the year, Spain assumes it's generating fictitious income. You pay 19% if you are a EU resident or 24% if you are a non-EU resident on 1.1 or 2% of the cadastral value, depending on when it was last updated. Let's clarify this imputed income tax, because this one catches a lot of foreigners by surprise. It applies when your property isn't rented out full time. And Spain assumes it's generating some kind of income just by existing. So basically, it is a tax on the privilege of owning a second home here in Spain, even if this home is generating no income. Be aware that this is a tax that whether you're renting out or not, you always have to pay. How does it work? It is calculated on the cadastral value. What is the cadastral value? It is the official value of your property as determined by the Spanish government for tax purposes. It is listed on your property deed and on your annual EB bill. The EB is the local property tax. Now, here is the key. The cadastral value is usually much, much lower than the market value, the price you pay to purchase the property. For example, if you buy a home for 300,000, it might have a cadastral value of 150,000 euros or even less, depending on when it was last assessed. It is based on factors like location, size, and construction costs, not the current market trends. And this is very good news because it keeps this tax lower than you might expect. Now, here is how the tax is calculated. The tax is based on a percentage of that cadastral value, which is either 1.1% or 2%. Which one applies depends on when the value was last updated. If the cadastral value has been revised since January 1st, 1994, which is the case for most properties in Spain, it is 1.1%. If it hasn't been updated since then, which is very rare, then it is 2%. You only pay this tax on the days the property is empty, not rented out or not used by you personally. So if you rent it out for 300 days and you use it yourself for 30 days, you are taxed only on the remaining 35 days of the year in which the property between rentals was free. Let's say your cadastral value is 150,000 and it is post 1994. So the rate is 1.1. It makes 1,650 euros annually. You take the 1,650 divided by 365 days per year and you multiply by the 35 days your apartment has been empty, which is a total of 158 euros. This 158 euros is the base on which you calculate this tax. So EU residents pay 19% of 158 euros, which makes 30 euros. Non-EU residents pay 24% of 158 euros, which is 38 euros, which is a small difference. The only difference here basically between EU and non-EU residents is the rate, 19% for EU owners and 24% for non-EU owners. But the calculation method and rules are the same otherwise. No deduction applied to either group. It's a flat tax on that imputed amount. You file this tax only once a year using the same model, the Modello 210, and the deadline is December 31st of the year you are reporting on. So, for example, for the taxes for 2025, you will declare it by the 31st of December 2025. The payment is due when you file. So there are no quarterly payments like for the rental income tax. You can submit it online through the Spanish tax agency's website, or again, get your tax agent to handle it. They'll take care of everything for you. If you miss the deadline, penalties can kick in. So make sure to declare this. However, good news, since the cadastral value is always lower than the market value, this tax stays very manageable. And if you're renting out your place more often, those empty days are really few, so is this tax. Now, if you are a non-EU resident, you might be wondering, can I do anything to lower my tax burden or get those deductions? Good news, there are options. Here are a few ideas. You may decide to become a Spanish tax resident. If you retire to Spain and you spend more than 183 days a year in Spain, you are considered a tax resident. Residents pay progressive income tax rates on rental income starting at 19% and can deduct expenses. You would need to live here half of the year and declare worldwide income to Spain. So weigh that carefully. Second possible solution, you can set up a Spanish company. You could buy or transfer the property into a Spanish company you control. Companies can deduct rental expenses and are taxed at a flat 25% corporate rate. So it's not a huge savings over 24%, but you would recover all the deductions. Starting a company in Spain is not complicated, and I can get you in touch with a tax expert who can take care of everything for you. Third possible solution: partner with an EU resident. If you've got a trusted EU-based friend or family member, consider co-owning the property. Their share would qualify for the 19% rate and deductions, while yours stays at 24% gross. You can split the income strategically to maximize savings. Again, get professional advice to structure this right. These solutions aren't a one-size-fits-all, but they are worth exploring. A good tax advisor can make all numbers for you and can set up a tailored plan for you and find the right solutions. The good thing is that there are solutions. So there you have it, everything you need to know about taxes when renting out your Spanish property as a foreign owner. Remember, I also recorded a video about the taxes that you have to pay when you purchase a property in Spain. I leave it in the description. EU residents get a better deal with deductions and with a 19% rate, while non-EU friends face 24% on gross income. But there are ways to work around it. Owning a property in Spain is still an amazing investment. And with the right planning, you can make it work tax-wise. Remember, it's not just taxes that you should consider. The cost of living in Spain is still much, much lower than in many other countries. And also, other maintenance costs of the property are much lower. This would largely compensate for the rental taxes that you have to pay. So, if you found this helpful, please like the video, subscribe to the channel, and click on the bell so you won't miss my next videos. If you have questions, please drop them in the comments. I'd love to hear from you. And if you need a tax expert or you want to talk about properties for sale, reach out. I am here to help you. For now, take care, and I will see you next time.